Hey everyone, Brian Balon here, your local Phoenix, Arizona realtor. It's been so long since I have done a video. I apologize. The camera is a little crooked, but I will not be fixing it because I'm not going to do that live. But I have a update for you and a video. Basically, the title of my video is "Our Price is going to drop in the Phoenix area," and it also applies nationally because we have been seeing some interesting market movement in the past 2 months, and it's moved very fast, similar to 2005, but not exactly. There's a little bit of, actually, a lot of differences between 2005 and today, which we'll get into. If it's the first time checking out the channel, please like, comment, also subscribe to the channel so you can get more videos. I would love to get back. It's been almost, I don't know, months, but the last market update I did was almost a year ago. So a lot has changed since then. I'd like to be back and more consistent. It's been very busy. Been working with a lot of clients, a lot of buyers and sellers, and we're here now and have some big plans for the channel. So anyway, let's get into it. Our price is going to drop. Okay, so there's a couple things we need to check out in regards to prices dropping. And the first thing is active inventory. So what is on the market, what's coming on market, and the rate that they're coming on the market. For those that have been wondering, when is it going to turn? One of the first detection pieces that we have is as an indicator that the market's turning is an increase in supply. That has been the story for the past several years that we've had low supply, especially in the Phoenix area. We've been floating around 4,000 to 5,500 active listings for almost 2 years, pretty much during the pandemic, 2020, 2021, and even early 2022 in some parts. That right there is a formula for increased prices and a very competitive market, which you may have heard of, you may be experienced with multiple offers and a lot of just crazy over asking prices, multiple over asking, appraisal waivers, appraisal gap coverages, just a lot of things like that. Shorter inspection times. It's been very competitive, and now we're starting to see a change in that because of the supply. So supply has been coming up. I'd like to go through by price segment, actually, very interestingly. If we go by price segment, we're going to see just how much it's changed over the past 2 months. So 500 from 500 to 6,000, 600,000, we've seen about a 120% increase. So we've had about 477 active listings to about 1,049 uh, more active listings in the past 2 months in that price point. 600,000 to 800,000, we're seeing a difference of 546 to 1,111. It's a 103% gain. 800 to a million is about a 100% gain from 259 to 519. From 1 million to 1.5, we've seen a 124% gain from 209 to 468. And from 1.5 million to 2 million, we've seen a 113% gain. So most of the listings actually are between these price segments, between half a million to 2 million. So we've seen almost a double, or some cases more than double, an increase in active listings at those price segments. So what's the story behind that? A lot of it has to do with interest rates. So we are seeing interest rates skyrocket. You've probably heard or seen interest rates about 6 months to a year ago was about, you could get something 2.5%. I know somebody actually that got refinanced at 1.99, which is the lowest I've ever seen and heard about. But I've had clients get qualified for 2.25, 2.5, and this is actually pretty common a year ago or so, and even in some parts of 2020. Now we're seeing 5.5, 6%. The lowest I've seen as of recent was about a 4.99. And that's not even locked, by the way. You need to lock the rate in order to secure that rate. And typically at this time, we're seeing people lock rates and having to pay to lock the rates. So that's also a stipulation there. It's an added cost, and the rate locks are actually quite well. They're more pricey from what I've seen. It depends on the lender, right? It depends on which products you're getting and the arrangement you have with your lender. But that's what I've seen personally with my own transactions. So that's one of the reasons why we're seeing more active listings. Interest rates are uh, basically making homes more unaffordable. The prices are already double than it was 2 years ago, almost. 2 to 3 years ago, and we're seeing now interest rates go up, which is causing 25 to 30% more cost to purchase a home. Needless to say, a lot of the market's being priced out of the home. And actually, people are discovering when they get under contract on homes that they can't afford the homes because they can't afford the payment. Their debt to income ratio goes too high. The mortgage payment now is too high for their income base and credit score, etc. So sometimes people are discovering that they're under contract with a home, and then they can't. And then they submit docs, and they realize the interest rates are much higher even 60 days ago from today, and they can't qualify for a home. So we're seeing a lot of buyers come out of market. Plus, there's also, there's the conflict in Ukraine. There's the inflation piece. There's also the consumer sentiment and the stock market taking a very significant pullback. So we're seeing a lot of different things in the market that's speaking to instability and also for unaffordability. And we have the result of increased listings and increased inventory in the market. So we're also it's good to note we're also in sort of prime selling season. So most of the listings come on market during this time of the year, which is basically second quarter and some of third, and it trickles down from third quarter to the fourth quarter, and then it rises back up in first quarter. I go over this in some of my other videos. That's typically the trend, and what we're seeing right now is this trends towards homes just sitting on market longer and an increased inventory as well. So, with that said, as I talked about interest rates and demand, active listings are up. Under contract ratio, which is basically the rate at which people are buying homes, so making offers and getting them accepted, is down 12%, and that's year over year. So just compare, similar seasonal changes, but year over year, we're seeing a 12% decrease in activity, which is also a reflection of the demand. Demand is decreased, active listings are increasing, and then closed sales are down 12% year over year. So we have even 12% less homes that are actually finishing on a close, and then transferring from seller to buyer. So that right there, those numbers speak towards a retraction. We're seeing a reversal. What we've been seeing for 2019, 20, and 21, those years, we've been seeing increases in under contracts and closed, or at least the same in some cases, the same under contracts and the same closed, but less inventory. So that right there was speaking still towards a growing market and a more a greater seller's market or hot market with prices going up and then buyers buying at still a very high rate for the rate of price increases and what is available in the market for inventory. So, um, so with that said, all of that to answer the question of our prices going to drop is that the current pricing is actually more of a lagging indicator. I went over the active listings under contract and closed data because that has to come first before prices adjust. So we need more time with active listings continuing to increase. Right now we're at about, I just checked, there's around 8,000 active listings. We need about, let's get to like 15, 20,000 active listings. And not only just having that number, but how fast we get to that number will determine, how quickly we enter into a more balanced market. Because right now, we believe it or not, we're still in a seller's market, and prices are continuing to increase. From mid-month to mid-month, so basically mid-month of May, so this month to last month, we saw nearly an almost 4% increase in pricing. So they lag. We need to see more inventory on market sit longer. 50% of homes that come on market are still selling within 7 days. So it's still a pretty hot seller's market, just not a frenzy like it was in 2021 or 2020. And we need to see under contract ratios and close volume decrease continually and in increasing measure. So we're actually seeing some of those trends now. We're seeing price reductions in active listings begin when that was sort of unheard of in the past 2 years. So we are seeing signs of that. It's going to take a couple more months. Now, the idea of it crashing all of a sudden, even in 2005, 2006, 2007, even though there were dramatic changes like there are now, prices didn't change overnight. It took about 18 months to 2 years from the early indication of the turn of the market in '05 before prices really started to take a major swing uh, backwards. So in our case here, uh, it could be up to 12 months before we start to see prices start to go backwards, and that's if we continue to see a trend towards increased inventory, and lower contract ratios, lower close volume. So that's what we're watching. This also in this title of this video, I put it's summer of 2022, and things are changing as fast as month to month and even week to week. Sometimes daily. Really, it was daily for the first quarter of this year in regards to interest rates. I mean, there was pressure to lock in a rate because tomorrow your program that you may have qualified for might not be available just that day, and then two, your interest rate could have gone up 0.125% in the day. So um, crazy times. That's what we're dealing with. Summer 2022, we're probably going to observe more inventory coming on market and price reductions for homes that are staying on market because they're basically those price reductions also, they're just getting to be more reasonable. If the market continued like it was in 2021 and we're on that trajectory, the pricing that they had would have been okay. But because the market has changed, it has to be reasonable, which basically is more in line with the comps. Houses were selling for 15, 20,000 over the comps month over month in the past year. Now they actually have to price competitively with comps or maybe even slightly under to get an offer. So not true for everywhere, right? Because it's different in every single market, hyper local. So you could be in a certain subdivision that's highly desirable. The house could be the most remodeled home in the community, and be a home that you price aggressively, but still within line with the comps, and it will sell within 7 days or less. There are exceptions, but in general, this is what I'm advising my clients if you are thinking about selling. So also, now that we're on the topic of if you're thinking about selling, this is the time. This is sort of peakish, if you will. That's what one client said. It feels peakish. We're starting to see the turn of the market and even investor activity decrease. So, and by the way, investor activity is what propped the market last year. So buyers were starting to back out of the housing market. Like primary home buyers were decreasing. Investors were coming in purchasing homes, and now they're even starting to decrease their volume. So with that said, we're going to probably continue to see the trends of a market that's becoming less hot of a seller's market. So it's time. It's time to consider selling if you've been on the fence, if you're looking to cash out, and any investment properties that you'd like to cash out. If that's your move, that's your play. This is a good time to sell. Um, Expect also to be on market for 1 to 2 months before you're getting an offer. So it used to be an instant sales market. You close, in 3, 4 days, your house is sold. Close in 30 days, you got a cash offer. You could close in 14 or less. Now we're looking at having to wait, having to uh, be on market for a month or two and not panic. So I have sellers that, in the past 2 years, have been used to hearing and seeing, how houses are selling in 2 days and it's just everywhere. And now, because it's a little bit more normal, still a seller's market, but more normal, it's taking weeks, a month, 2 months. That's okay. That's normal. That's actually more of how it's been historically. I think for sellers, we've just been spoiled with just being able to sell your house for top dollar at any given time. So 1 to 2 months. And I go over if I'm listing your home for sale. I typically go over data that will determine whether if you price at a certain amount, how fast your house would sell. Also, another thing, and I mentioned this earlier, some buyers may not qualify anymore. You may get an offer on a home and they back out and you're wondering why. It's because a lot of the reasons I'm getting from these situations is one, they have concerns about the market, or two, they're no longer qualified. So uh, prices of mortgages have gone up about 25 to 30% than it did about 6 to 8 months ago. So we're seeing less affordability, and in real time, that's what we're seeing is people making offers on homes they love, and they realize once the lender starts locking in the rate and figuring out their monthly payment, they can't afford it anymore. So a couple things to keep in mind if you're selling. If you're a buyer, you may think, well, this is not a good time to buy. Uh, that's up to you, right? So that's always up to the buyers and you and your individual preference. and your tolerance to market risk. I would say even if you're on the fence, meaning if you can just barely qualify for a home, your debt to income ratio is right on the line, and you can afford the payment, you may want to consider waiting. Um, Perhaps, again, we can talk more about that, but you may want to consider that. But also consider this: think about real estate and investing in real estate. If you're a buyer who can basically be right on the fence, or if you're a buyer who's well qualified and you can purchase a home comfortably, is to think about real estate long term. So, in the past 2 years, we thought about entering into the real estate market like we're entering into the stock market. I need to buy at a good entry point, and that is reasonable in real estate because, similar to the stock market, the real estate market is a market. And so we want to be wise and prudent in entering. Totally understandable. However, real estate historically is something that you work with long term. So if you enter into something, you're typically holding it for at least 5 to 7 years. And now the average, according to National Association of Realtors, the average homeowner owns their home for 7 to 10 years. So so think of it long term, because if you're renting, let's say for 5 to 7 years, decide I'll just wait for the market to turn, and maybe in 3 to 4 years I'll buy when the market's low, or 5 to 7 years. Let's just take 5 to 7 years for instance. You've been renting for the next 5 to 7 years. At the end of that, you have zero equity. If regardless of what happens in the market, uh, it goes up and down in the next 2, 3 years, 4 years. Uh, Markets usually typically recover and it appreciates over time. And sometimes it takes longer than we'd want. 5 to 7 years is a good average, 10 years. In worst case, it took 12 to 15 years, right? Like if you bought in 2005 or six, you broke even at the year 2000 ish, or I'm sorry, 2020, and then you saw your appreciation in 2021 and now of 2022. So worst case, it'll take 15 years, but 2008 has to happen for it to take 15 years again to go from being underwater to back to the green. So think long term. Basically, is in 5 to 7 years, you'd have equity in your home, plus you own the house, and then from there, in the worst case, let's say you are underwater, it's just time that it'll take to get back to the green. So there's that, and then also just consider the cost of purchase, and check with your lender if you got pre-qualified 60 days ago, or if you're thinking about getting pre-qualified now, and you did last year. It's a lot different market and cost of purchase. So check that out for sure, with your lender and find out. So with that said, price is going to drop. Not yet. It's going to take some time, probably several months. Quarter 4 of 2022 is going to be very interesting because we'll have at least 6 more months of this playing out, or 3 to 6 months of what we're seeing today play out. And if the trend continues or accelerates, we could see it early quarter 4 to late quarter 4, or maybe even sometime quarter 1 or quarter 2 of 2023. It remains to be seen. We're just sharing with you early detection and some of the trend lines we're seeing, which could lead up to a balanced market or even a buyer's market eventually. So hope this has been helpful for you. It's great to be back doing videos. I appreciate y'all watching it. Hopefully this has been of value. If you have any questions, my contact information is in the description. As usual, you can contact me in any way, and love to help or give insight. Hope you're all doing great. Thanks for joining, and we'll catch you next video very soon.